2025 has not been kind to Indian markets. Volatility, global tariffs, weak earnings and relentless FPI selling, all of it dragged sentiment down. Foreign outflows crossed 1.38 lakh rupees crore and the Sensex has gained less than 10% this year, one of the weakest performances among Asian peers. But global brokerages now believe the worst is behind us and 2026 could be a turning point for Dalal Street. So what exactly are they predicting and what could fire up India's next big rally? Let's break it down. Morgan Stanley is the most bullish of the lot. In their best case scenario, the Sensex could hit 1,07,000 by December 2026. They expect a sharp bounce back in corporate earnings, stronger domestic demand, and India regaining the performance it lost to other emerging markets this year. Goldman Sachs has upgraded India to overweight. They see earnings accelerating over the next 2 years and project the Nifty at 29,000 by end 2026, roughly a 14% upside from current levels. Goldman's high conviction picks include Reliance, Titan, Havells, and sectors like defense, consumer, and banking. HSBC is also turning positive. Their Sensex target 94,000 by end 2026. That's a clean 10% rise from here. They expect earnings to recover as interest rates cool, GST cuts lift consumption, and banks and auto companies lead the rebound. UBS, however, isn't buying the bullish narrative just yet. They remain underweight on India. What are their concerns? High valuations, heavy IPO supply, and persistent foreign selling. UBS prefers banks and consumer staples and warns that India still has no direct AI beneficiaries unlike the US or China. Franklin Templeton expects modest earnings growth in FY26 with a stronger FY27 ahead. They say valuations are more reasonable now, making selective stock picking attractive. Emkay expects an earnings revival in the second half of FY26 and maintains a Nifty target of 28,000 by September 2026. But they caution that stretched valuations mean sector selection will make or break returns. So brokerages largely agree on 3 drivers: earnings recovery, return of foreign investors, and cooling inflation and supportive policy. Now, if these fall into place, India could see a market narrative shift from defensive to growth. So, is a new bull cycle guaranteed in 2026? Not quite. But global brokerages say the setup is far stronger than what we see this year. The big question now is, can India convert optimism into a full-fledged market comeback? We'll keep tracking it. Till then, if you found this breakdown useful, don't forget to like, share and subscribe for more deep dives on markets, business and the economy.